Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Standard disclaimer before we get started: nothing here is investing advice. Do your own due diligence. And today's guest is the founder of Peter Grandich and Company, a veteran of financial markets, and the author of Confessions of a Former Wall Street Whiz Kid. It's Peter Grandich, somebody I always love talking to. Welcome back to the show.
Glad to be back, and I enjoy as well speaking with you.
Great. Well, I want to get started with the political side of things, as I believe politics are connected to the economy and markets in many ways. And although I'm going to be talking about Joe Biden here, I want people to realize I despise the political class pretty much equally across the board. But the reality is, we're starting to see even the left question the situation that's going on, the weight of evidence, and the corruption scandal that's happening with the Biden family. It shocks me there's not some sort of impeachment happening or some sort of action being taken. I think this speaks to a deeper, blatant corruption happening in the political system across the Western world. It's happening in my home country of Canada as well. Our Prime Minister there, Justin Trudeau, seems to have scandal after scandal, and absolutely nothing comes of it. He literally assigns his friends to look into who he's put in power to look into the matter. And surprise, surprise, they don't find that anything's wrong. And it seems the citizens kind of just keep going along. They don't want to pay attention. They just want to get on with their lives. I want to know how you see this all headed, this kind of out in the open corruption in the political system, and how you think it might affect financial markets as well.
Well, I think it would be naive for us to think that suddenly it just started in the last few years. I think there's been political corruption going back thousands of years. I don't think that's unusual. I think what's very interesting here is that there's no what quid pro quo smoking gun, absolute slam. Here it is. But there's certainly a weight of very good circumstantial evidence and some serious evidence when you have people coming through as whistleblowers. And it's not easy to be a whistleblower. It's your career is, no matter what they say, is basically over. Even if you're able to stay at wherever you were, you'll always be looking over your shoulder. You'll always be concerned about your next move. But the combination of what apparently has occurred, at least in some of our eyes, I'm one of them, combined with the lack of ability to function on a daily basis. I think that's really the biggest acute story right now, is that as each week goes by, it has become more and more apparent that Biden is suffering what many people of his age are suffering. The only thing is, he's the president of the United States. And the scariest thing about that is, and again, this doesn't, because I say this, mean I'm a Trumpster, because people think if you're against Biden, you have to be for Trump. Actually, I'm actually Tim Scott, actually, who's a young African American running from South Carolina. I find him most intriguing. But the thing about is if something happened to Biden, who replaces him? I almost would want him to stay there compared to what we've seen. Harris, just total inability to function on any presidential or vice president or really any level. So I think the mistake is, Jesse, is that people have not yet factored in political as well as geopolitical, what's happening around the world. We'll probably get to that later, into their investment thoughts. And that's something that's definitely going to have to change, because it's not going to be able to stay under the carpet, so to speak, anymore. It's coming out. It's coming out enough where it's likely to gain momentum. And once it does, it becomes a snowball. So I think you have to involve politics into your investment decision-making process.
And over the course of your career, you've obviously seen political cycles, different parties in office. What are some of the biggest impacts you've seen in terms of the political cycle when it comes to financial markets?
Well, in my own, really remaining world that I work in, I work with a planning group that specializes in dealing with small to mid-sized businesses. We have clients in 47 different states in the United States. And what I've heard over for 2 decades now, but it became acute even before the pandemic, but after the pandemic, it's just mind-boggling how difficult it is for a small business to operate now on all sorts of fronts, from regulatory issues, labor shortage, getting product, services in order to fill your end of the bargain, the difficulties, the social issues now that used to stop at your door now come through your door, and the political process as well. So knowing America had always worked off the backbone of small businesses, it wasn't the big corporations that carried America through the day, it was small businesses. That's something that hasn't been talked about, but there hasn't been really good political actions taken that have made it better, easier for a small business to operate. It's just the regulatory and what you have to be concerned of in reporting stuff for a small little business owner is become too challenging, and that comes at the time when we have realistically saw a lot of businesses get crushed or badly hurt because of the pandemic and the unnecessary, clearly now people realize, of shutting down and all that type of stuff. Many have not been able to recover or recover to a level pre-pandemic.
So, when it comes to investing at the moment, you've mentioned that you don't think there's a reason right now to jump for joy and be buying, but this is also not a time to run for the hills and prepare for Armageddon. In this uncertain environment, is this a time to be sitting on the sidelines, putting cash into short term T bills and money market accounts, and just remaining patient and seeing how things unfold?
Well, it's kind of like being the Maytag repairman. No one likes that position. They either want to hear that you're bullish and I should be buying, or I think the world is coming to an end. My decision making was, because it started back in 2021. That's when I felt America really entered its worst ever social, political, and economic era. But at the beginning of this year, I, by all means, was forecasting and looking to participate in a rally. But what I've said in for the last many weeks is, please, if you found yourself a year ago that you were too overweighted in equities, which a lot of people are, use this coming rally as an opportunity to lighten the load, not reload. And the problems that even the big bears who've been wrong, who were calling for tremendous sell-offs, deep recessions, I don't think they're wrong yet. I think their timing might have been off, and I think the severity of what will occur is off. But I don't think it's clear sailing, and happy days are here again. And that comes, and I say this often, and it's 40 years of being in and around this arena, Jesse. There is within the financial service community a large segment that are card carrying members of the Don't Worry, Be Happy crowd. No matter what's transpiring, they will spin it into a positive mode. And I like to always joke that you can throw them off the top of the Empire State Building and all the way down, they'll all say the same thing. Hey, so far, so good. So you always have to keep that. That's a tilt against negatives, and the financial media is basically tied to the hip. They don't challenge them, they go along with it. And so right now that group has painted a picture that, hey, whatever transpired, it's behind us. Happy days are here again. It's just a matter of the Fed stop raising rates or eventually get to lower rates, and we're all going to make double digit returns again. That, I think, is gone. I think the reasons that we were able to do that are gone, and it's just not going to happen. It's going to be a much more challenging market, but it's not yet a market that I think is going to explode to the upside or implode. And you make it a very good point. It's hard to compete with 5% 1 year paper right now. I mean, that's a fairly big challenge. Certainly a challenge that didn't exist for several years or a decade, and I think that will stem any substantial rise in the stock market.
Yeah, and the Don't Worry, Be Happy crowd is out in full force these days. We've got people like Jim Cramer saying it's not just going to be a soft landing, it's going to be a no landing. We've got Barron's Magazine with a cover of a bull dancing on the front saying this bull market has legs. I believe they also did an article saying, titled Why There Won't Be a Recession or something like that. So definitely something to be cautious of. And I want to move now to the BRICS nations, the trend of de-dollarization. I'm wondering how much credence you give to this. Do you think the BRICS can really succeed with a new gold-backed currency that could compete with the US dollar when it comes to international trade? And what are your thoughts about it potentially being backed by gold?
Well, that's the wagon I hitched myself to in the last year or two. It was clear and evident. We knew central banks were not buying all this gold for a trade. It just not wasn't in their means. I think the straw that broke the camel's back for a lot of these countries is how we reacted to Russia when the events occurred with Ukraine and the weaponizing of the dollar and the punishment that the United States tried to install with some allied support from Europe. And I think a lot of countries around the world went, "Whoa, I don't want to be catch us in that position. Why do we have to be so dependent on the United States and or the United States dollar?" I think that's the real momentum behind the BRICS. I also think that the time has come where America has lost its dominance on the world stage, deservedly so because of some of the actions that we've taken. And there's a new kid on the block, not quite new, but he's getting bigger and stronger, and that's China. And although they have some internal issues that they're going to have to really challenge him in the coming weeks and months, and it's just common sense now for people to say, "Hey, it's time for us to have at least an alternative. We should be able to have our own choices." And I think that's what's make the BRIC nation coming together. In terms of the gold-backed currency, they're really speaking in recent weeks, opening that door, really speaking a lot about it. And the reason you have to give it validity is because of how much gold has been purchased by central banks. And whether they introduce it as something as, hey, it's replacing the dollar as far as we're concerned, it's an alternative, or it's just going to be used by members, but they can at least know what the currency we're going to be using is not going to just be, paper money, so to speak. So I give it all validity. I think it's coming sooner than later. There is quite a talk that as early as this August, when a big meeting takes place, is where we can expect some formal announcement. And there's been some officials, a part of these BRIC countries, that have already spoken to that to the media. And I don't see it in their interest to talk about that and then set up a disappointment that nothing happens. So I really think there's something coming. And I'll tell you this much. I would say 95 and 98% of the entire financial service industry here in the States has little or no knowledge of it, understanding about it, or caring about it at this moment. But I think it's going to be one of the biggest economic and political changes that crosses almost all borders that we've seen in decades.
Very interesting. I want to touch on a quote from yourself that you recently made on your YouTube channel, where you said, "The metals market, we're either at the single greatest buying opportunity in 40 years, or literally, the bell has rung and people like me didn't hear it and are trapped in a door that's never opening again." Can you expand on that for us?
Yeah, the latter is kind of scary. And thankfully, we had a holiday here, so I was able to clean up the bandages and the black and blues that the junior resource market in particular has given to me. I don't think I'm alone in that, although sometimes when you listen to other so-called financial authorities, you think somehow they always escape it, but they don't. I think really how I look at it is, this is my 40th year. I've seen a few of these. The closest one that this reminds me of was just before the turn of the millennium. Gold had broken down and went below 300. We were all worried about everything was going to shut off, and the internet craze was just mind-boggling. And when gold broke below 300 and stayed there, several junior companies flipped. They became internet companies. And I've half joked to myself and my followers that we should know we're at the bottom when we read some junior resource companies become an AI company now. And that wouldn't surprise me that's going to happen. But what's different this time is back then it was understandable because the metal prices were so low, nobody could make money at that. But where the metal prices are still, even with gold, hovering 1925, 1950, silver 22, 23, copper steel, as much as it's down from its highs, 375, there's a lot of money to be made at those levels. And yet, the further you go down the food chain, the just cross the board damage that there is, and I suffered it. I've lost more money on paper at the moment than I ever imagined as a young man one could have. So what I have to say to myself, and I said openly, is Did I somehow miss something? Did the end of something happen and I didn't hear it and they rang a bell and we didn't get out and we're trapped forever? Or it's about as attractive as it can get, as tough as it is. And I think it's the latter, because if you buy the bullish argument of where the world is going, the electrification, the movements of alternative energies and all these other things, and when you look how little money relative to especially past decades has been spent to find the metals that are going to be needed for this, then if you can look past days, weeks, and even months and invest for a matter of years, the shares from the top all the way down have become extremely, extremely attractive. Now, two things. One, we're starting to see that because the majors are starting to step up. Glencore made another deal. Barrick is talking about, openly speaking about looking at juniors. That's very important. And the second thing that we're seeing now is we're seeing some of the classic signs of sentiment switching. I can't tell you how many different stories have been either sent to me or I read on Twitter or somewhere. Somebody saying gold's going to 800, metals are dead. It's no longer attractive, And of course, the other thing that I just put out a thing today about, I call it Bitcoin, not Bitcoin, so that'll get me enough hate emails. But all the things that go against uh, being involved in the metals and all are getting highlighted. And so from a contrarian standpoint, I don't think you could ask more for it. The thing you must understand is it's not going to be a V. It's not going to go down and go like that. It's going to take a while. There was a lot of damage done. There's going to be some significant mergers out of necessity. A lot of juniors are running strictly on air. They are out of capital. They have too many shares outstanding. They're either going to have to go through the rollback story or somehow merge together to try to create an interest. And if I may, I don't want to be long-winded in this, but there's dramatic changes in the junior resource market just than there were 20 or 30 years ago. The biggest is it's much harder for a junior resource company to get to the end user, simply because there aren't individual financial advisors anymore who build books of businesses buying individual stocks. And so years ago, there were thousands of them. There was always hundreds at a gold show of financial advisors. If you got them interested in your stock, you got their 2, 3, 400, 500 clients interested. Now that same mining company has to reach those end users if they all still exist. And there's a question whether or not is there as many people as there once were because of things like cryptocurrency and others where people went off to. You have to get to them in a different way and more on a one-to-one basis. So it's far more challenging for a junior resource company in particular, regulatory-wise and institutional-wise. I would argue we probably still have the same amount of institutions that would play these type of companies, institutional managers that existed. This is an industry that was always very small, and I haven't seen any growth within it, even though I stepped out of it for a few years. So I think it's far more challenging now, all things being considered, despite higher metal prices for these companies. And I think investors, speculators need to take that into consideration and understand it is much more difficult for these companies to build shareholder awareness, which of course hopefully ends up helping the share price rise.
So, if we are looking at this as a potential great buying opportunity, which metals and commodities do you think will perform the best? We've discussed uranium in the past. I know you're bullish there. That's another sector where sentiment is very low because although the spot price of uranium has risen a decent amount in the last little while, a lot of the equities have not followed suit. So, I see people throwing in the towel there as well, saying, I'm done with the sector. Other people saying, I just hope I can break even. So I wonder what your thoughts are on uranium and what other commodities and metals you see outperforming in the years ahead.
Uranium is probably the safest of them all because outside of a terrible accident, again, it's becoming clear and apparent it has to be part of the next 10, 20, 30 years growth that's expected for electricity demand and power demand. There's just no way wind and just solar and buoys and things of that nature are going to be the call of the day. So I like I said, I remain constantly, I call it the turtle race. I think the turtle always does win the race, but that's how you have to look at it. I think the difficulty in the uranium sector is you have a handful of known producers that you can play publicly, and the rest are all total speculations. Juniors that are hoping to find something or develop it and what have you. And so it's very difficult for that junior segment to get going when the price is not skyrocketing and the whole sector is not skyrocketing. But uranium itself, the argument has the best argument. I think the gold argument is what we just discussed earlier. There's going to have to be the only way the world could ever get out of this horrendous indebtedness that it's got itself in is going to have to bring back something to people have faith in paper currencies again. They have to be backed by something. And I think the BRICS will do that. I'm pretty confident in that myself. So gold there is a play. And then copper. But copper is one of those things for the next few months, it will just tear your heart apart because people are all caught up in the momentarily negativity of economic strength or lack of it, when the demand for it and all the things, if we even come close to reaching the levels that governments and all are speaking about in terms of electrification and all, the demand for copper is just going to go off the charts. In fact, I a lady put up over the weekend a very, very good summary of why copper is something that if you can get past these next few months, if you can make 2024 and beyond your investment horizon, I think things that you can buy now at these levels down here, irregardless of what may happen in an overall market, other than a total implosion worldwide, that's another metal. And then there's a lot of things happening now on the critical metals. Now, Jesse, I'm not strong in that. I never got involved in it. But we just heard China suddenly say that there's these two metals that I didn't even really know about beforehand. Now they said they're basically going to hold it back and they have 95% of the world's supply. I have a little zinc company in Ireland that I was a sponsor and I've invested in. Turns out they just made a discovery of that metal. So there's going to be a lot of needs for the metals. And boy, Jesse, the lack of real CapEx money being spent to explore has dropped off dramatically. These arguments that the bulls are making about shortages are real. They may not come as quick or be as severe, but they're legitimate. And that's why I still have hope that, if we can have patience and live through this, which has been very painful, bear market in the juniors, I think that we're going to come out of the other side and be okay.
Well, you mentioned wind energy there, and I wanted to touch on an article from CNBC reporting that wind energy may not be the holy grail of green energy production, because we've seen Siemens Energy stock plummet by roughly 37% on June 23rd as costly failures in relation to wind turbines left investors in doubt. And I want to read a quote here from the head of EU capital goods and industrial technology at Alliance Bernstein, where he said, although it's hard to tell at the moment, my best guess is that this probably actually is an industry-wide issue, that is with the parts and components of wind turbines. Somebody I really admire listening to, John Polemy, has spoken at quite great length about how a lot of these wind turbines, they just don't last, and they need parts replaced very frequently, and very often those parts aren't available. So if these cracks keep appearing in the wind energy sector, first of all, what are your thoughts there? And secondly, could this be long-term bullish for reliable energy-producing commodities such as fossil fuels and uranium?
Well, everything comes back to nuclear energy for me. So this is just another added reason why nuclear energy underline must, be a significant part of whatever country or countries are looking to put power into its population. I think the wind thing is quite interesting. We have a situation here off the Jersey Shore, similar. They're not performing as well. There's been issues. There's some issues regarding fish and whales and things of that nature and all. And again, it goes back to what everybody that is bullish on uranium says is it's really the best, single factor that we have to do. But one of the reasons the wind and solar gets pushed, Jesse, versus maybe nuclear out of a politician's mouth right away, takes much longer to bring nuclear power to people. It takes quite a while to build those plants and things of that nature, where the wind stuff and solar can be put up and you can look like you're doing your job. And it's being fairly recognized, and I applaud that person about that article, that it's not the cure-all or the sure thing it was. And that's why I said, and this talk that somehow just fossil fuel is going to go away and no one's ever going to use it again and all. I mean, some of the things, if I may just sidetrack for 1 minute, uh, my in-laws are all in Ireland and many of them are still farmers. At least my nephews and grandnephews are now. And they want to get rid of 200,000 cows because somehow that'll help climate control. Well, that's all good, even though it's going to make it very difficult for these people to make a living and people provided food. But meanwhile, China is still going at whatever they want, burning coal and polluting the world. So unless this is all uniformed around the world, you're taking from people here and not taken from other people that need to be taken from. So I just don't see this argument that fossil fuel is just going to disappear and there'll be no interest in it. The problem that you have there is because people like Biden and the administration just beat up the oil companies and called them every name in the book and everything that's wrong is because of them. Why do they want to go put up new capex to spend billions of dollars exploring around the world when even if they find some new stuff, there's a question of whether they're going to be able to sell it or if they're going to even be able to be allowed to sell it. And again, we're going to energy crisis and energy shortages are not gone away. In fact, they're going to become more acute because we are falling way behind providing the things necessary versus the demand that's continuing to go up. Everybody wants a gadget. Seemingly, a lot of people want electric cars and everything, but they don't want to have the mine next to them to develop the metals or the structure that's going to carry the electricity and all, but they still want to have all these gadgets, and you can't win that way. They're going to have to make one choice or another.
I want to switch over to geopolitics here for a moment, and that is to agriculture and the EU now wanting to give a Russian bank access back to the SWIFT system in hopes that Putin will support an extension of the Black Sea grain deal set to expire on July 18th. This is a quote from Business Insider. The proposed concession to let the Russian agricultural bank back into the SWIFT system underscores the difficulties the international community faces over the sanctions levied against Moscow. I think most sane people have come to the realization or knew from the very beginning that sanctions levied against Russia are going to hurt the sanctioning countries more than Russia itself. So, what are your thoughts on this development? Do you think we're going to see more backtracking of sanctions, perhaps on natural gas, as an energy crisis could potentially unfold moving forward in Europe?
Yeah, absolutely. And don't ask me to say what is even happening in the Ukraine war. If you listen to one side, it sounds like Russia's about to fall apart and Putin's going to be assassinated, and that ends it. You listen to another part, and Ukraine is about had it. Just a matter of Russia. The bottom line is, if you think about how critical those areas of the world were to certain commodities and the uncertainty of their ability, even if tomorrow, if the fighting stopped, the destruction that has occurred in those places, or even, God forbid, most recently over this weekend, the talk of arming these nuclear plants and blowing them up or whatever the case may be, it's just unheard of. So I don't think there's going to be strong support for continuing or increased sanctions. And I think more calls will come out to lessen them because at the end of the day, people are going to need to eat and people are going to not want to, freeze in the winter and get so much heat that they can't get any air conditioning because there's no power to turn on. So, yeah, I think the sanctioning days are behind us. And one other thing I think that's important is we talked about it off air because of what you maybe personally is the thing in France is not something to sneeze at and not look at. I mean, this is a huge uprising in a main Western world country. And it has a lot of ramifications that we haven't begun to see what could happen. And it could happen in other countries as well. And so I think that's a geopolitical concern that no one's really looking at the moment, but could impact markets in the coming days and weeks.
So, talk to us about how you see the debt crisis unfolding in the US and in other parts of the world. Because as debt continues to skyrocket, politicians, this is happening in the US, this is happening in Canada, this is happening across Europe. Politicians keep somehow shoveling money into Ukraine. And it seems, if one were to just take a step back and look at it, like we have completely unhinged lunatics running the asylum. This obviously can't end well. How does this get resolved, if at all?
Well, I believe there's two main economic related crisis for the United States that also impacts others. But my focus is because my business just focuses on people residing in the U.S. That's all that we could deal with in our planning group. The debt crisis. Just in the few weeks since it was just before they were, talking about how they were going to stop all this debt going up and we were going to have a failure of payments and all that stuff. We saw like a $700 billion increase in the long-term debt, and we're running towards 33 trillion. And I sit here and I look at the closest thing in America to a bipartisan government organization is the Congressional Budget Office. And they have put out a study that says in less than 9 years, we are on the path to reach $50 trillion in hard debt. 32, 33 now, going to 50. We also know we're not going to see zero interest rates again. You're just not going to get back to that insanity. So let's just say 5%. We bottom out at 5%, which was for a lot of years was considered low interest rates. And we're at $50 trillion in debt in 10 years or less. That's 2.5 trillion. Remember, a lot of debt now has to be refinanced. The cheap money that was 10 years ago, you're not going to be able to do at that level. So that's 2.5 trillion. Last year, we had the best revenue ever. We took in $5 trillion in revenue in the United States. Well, 2.5 trillion will be just to pay interest expense. That's it, Jesse. What's left cannot cover what America's gotten used to in terms of services, armed services, things of that nature and all. So it's only an accident waiting to happen, and it has 10 years or less to occur. And there's no movement on anybody's part to stop that rise, even just curtail it, stop it here. So paying that debt off is just a joke. I mean, that's never going to happen. But paying the interest is going to become a real challenge. And then the other problem is at the same time is we have a terrible retirement crisis. And I won't go into it. I've covered it. But with 2/3 of the Americans with little or no savings, they're not going to see retirement. So they're not going to be able to tax extraordinary so you can help pay some discretionary funds of theirs towards even the interest that's going to go up. So more and more of that load is going to be on the people that still have something that they could be taxed on. And those are the people that are getting tired of pulling the wagon as more and more people get in the wagon instead of pulling it. So the combination of both, to me, is only a disaster waiting to happen. Now, it could still be 10 years away. But I think if you're under 65, especially if you're under 50, you got a lot of really worries to what life is going to be like. And you were right. It's not limited to the United States. Canada's gone down a similar path. Japan has a huge issue from demographics and how many people are going to be retired versus how many people are paying. And it brings us to that last part of the battle, and that's going to be the battle of ages. Because sooner or later, 35-year-old that just keeps getting taxed up to their necks are going to say, listen, I can't keep affording for you to pay an 88-year-old person to go have a lung transplant through Medicare. It's just not going to work for us. So, and then the 88-year-old is going to go, wait, I worked all those years. You took the money. I want to live. So we're going to have a battle of demographics as well as an age battle. So let everybody talk. Let the Don't Worry, Be Happy crowd. Let Jim Cramer ring his bells and tell us how great things are. But I can tell you this, you're young enough. I'm 67. Maybe I'll be here at 77. You don't know, 80. But within the next 10 years, we are going to face an ability to function unlike anything that's ever been seen in our entire history. And so call that doom and gloom, but I don't have dry food. I don't sell gold. I don't sell ammo. I don't sell cabins in the woods. There's nothing to gain from that, but I think it's a reality that very few people are facing up to, and mostly are going to have to face it and deal with it. And if not them, their children and their grandchildren who they love the most.
Well, that's a perfect pivot into the final question, which is, we're seeing France burn, as you mentioned. We don't know what the consequences of that will be or how far that will go. A hot war that doesn't seem to be ending anytime soon in Ukraine. So-called Western democracies turning more and more authoritarian, rising geopolitical tensions. The list goes on and on. So how can investors keep their sanity and avoid making mistakes when it comes to managing their wealth in difficult times like these?
Well, having lost enough money over different times, I think I can speak to that for you. I think some of the things to learn is that the ultimate crime in investing is not being wrong, it's staying wrong. And then the other key part is that it's not how much you make, it's how much you don't lose. And I think that's going to be a real critical part going forward here. I think we have to be less risk oriented and more conservative oriented. Uh, like I said, if it's not in your family, it's your neighbor, and if it's not your neighbor, somewhere's down the street, they are just getting by. And that's all they're going to be able to do, just get by. And as they get older, they're going to call on their government to assist them more. One huge problem that doesn't get spoken about at all, but millennials and Zs are all facing it, is the affordability now of housing. That has gotten just out of completely hand. And now you're going to have an older people working who are going to need more support and more days. I trust me, just things at 67 are harder to do than we're at 37 and 47. And we're going to have a very aging population. And all these things are expenses. And all these things citizens are going to look to government to do something about. At a time when millions upon millions of people are coming in different countries, not just here in the US, but we're seeing in Europe and all, with immigration and people feeling that they're somehow bleeding the system and they're not even citizens or what have you. These are all confrontational type of things that are going to have to come to a head. It's not pretty to talk about. My faith is the only thing for me that gets me through the day. But I can imagine if one doesn't have that faith and sees those same issues, how much hard that must be on them to see and have to deal with it. And I don't think there's any easy solution. I don't think there's a quick description I can give you. Well, just do this, that, and the other, and you'll be okay. I think we're all going to be facing these challenges.
Very well said, and thank you so much for joining us today, Peter. For those who want to learn more, could you tell us about your blog, your YouTube channel, and anywhere else you'd like to direct people online?
Well, after hearing something like this, I'd be surprised anybody wants to learn anymore, but it is the truth, at least as I see it. So, yeah, I love Twitter now. I'm very active on Twitter. It's a great way to communicate real fast, real easy, simplify. But I have a blog, petergrandich.com is my website. I also put out some YouTube videos, and I post great interviews like yours. And by the way, some of your recent guests, I've been learning a lot from. So keep up the good work. I mean, a couple of people you had on most recently, I learned things that I didn't even realize was happening. So one of the reasons why I think shows like yours are so much better than, you mentioned that network. I call it tout TV because that's all it is. It's not a place of fairness or balance. It's a place to promote products and services for people that advertise with them. So keep up the good work. I know you're not in Croatia right now, but when you get back to Croatia, it's still a place I hope to go from because Grandich is Croatian. My grandfather was born on the island of Silber. Someday I still hope to get there.
Well, thank you so much for those kind words. I'll put links to everything you mentioned in the description. Yes, I will be back in Croatia later this year. I'll probably be having longer term residency there as well. I do love that country and would love to see you there. And until next time, Peter, really appreciate you once again coming on and sharing your knowledge with our audience.
Thank you and God bless, my friend.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.